Hello and welcome. This is BQ Prime. I am Agam Vakil, and this is the FNO show. In the show, we take you through all that is happening in the equity markets and specifically talk about derivatives and how we can leverage them, pun intended, as far as the trade today and trade over the next few sessions is concerned. Today, we talk about how the Nifty has panned out in quite unexpected lines perhaps. We were expecting some weakness in HDFC Bank, and because of that, on account of that, we're actually seeing a little bit of weakness as far as the Nifty is concerned, as well as the Bank Nifty. Bank Nifty specifically will also be in focus because today is also the weekly options expiry. As far as the Nifty goes, we're talking about the futures shedding a little bit in terms of open interest, and the Bank Nifty September futures, on the other hand, not doing too much. But when it comes to the Bank Nifty weekly options, until Friday, there was open interest maximum standing at the 46,000 put. But now that we have seen the Bank Nifty open well below that mark, that has actually become a little bit of a resistance zone, and now we have maximum open interest in the 46,000 call. Mind you, I'm talking about today's expiry, and on the lower end, we're starting to see a lot of build up around the 45,500 put, and that is the sort of range indication as far as the Bank Nifty's expiry for today's day of trade is concerned. As far as the Nifty goes, again, a very, very narrow range. On the higher end, we are looking at around 20,100, 20,200, and that expiry, of course, will come through tomorrow. And in terms of addition, as far as stocks, as far as those strikes go, we continue to see a lot more addition in the 20,100, the 20,000, and the 20,200 calls as well, and a lot of writing around the 20,000 put too. But let's bring this conversation forward, and let's bring an expert view in to see where they see these indices and how they see expiries. So today we have with us Kunal Shah of LKP Securities, who looks at the derivatives market out there. Kunal, good morning and thanks for joining in. Let's start with the Nifty, shall we? Where are you seeing the Nifty? Of course, things have changed slightly this morning, but what's your view ahead?
Good morning. I think if you look at the Monday's data, what you rightly pointed out, firstly for Nifty, 20,100 was the put strike where we had seen a good put writing happening. Today, in the opening session, we had a gap down. We broke that 20,100 mark, and we have seen follow-up selling pressure. Now, the major reason for this was the HDFC Bank selling what we got. So, if I look at the Nifty on a technical chart perspective and combining it with the data, the next support for Nifty stands at 19,950. And if that is breached, we go toward 19,850 on the downside. So currently we are trading at 19,970. So if I say 20 points from the lower end, we have a support for the Nifty index. If that is breached, then we can see further sell-off coming into the picture. Now already we have seen a 160, 165 points kind of a fall. My view on an intraday perspective, you will get both the opportunities buy and the sell. So if 19,950 is held, one can again initiate a long position from the current levels on intraday perspective. Keep a target of 20,020 to 20,040 on the upside. Again, you will get an opportunity for there to sell again and look for lower end. So I think it's a perfect tradable markets. What you will be getting opportunities on both the side on Nifty, buy side as well as on the sell side. Talking about the Bank Nifty, now today being a expiry day for Bank Nifty, the volatility is going to be quite high. And specifically with the news of HDFC Bank, Bank Nifty as an index is going to be seeing a very good volatile movement. So I think better to trade in the Bank Nifty index through strategies that will play a very good role at the current levels. So firstly, I'll mention the support and the resistance zone for Bank Nifty. The support for the Bank Nifty index stands at 45,350 on the cash market, that is on the spot Nifty, on the spot Bank Nifty. On the higher end, the resistance is at 45,750. So you can say probably this is a 400-point range in which I'm expecting the Bank Nifty index to expire in today's trading session. Following this view, I have an intraday short straddle strategy for the Bank Nifty index, where at the current levels, you can sell the 45,600 call option as well as you can sell the 45,600 put option. So this is a short straddle strategy which is deployed generally when you are range bound on the markets, that you expect the market to expire in a certain range. The entire total credit spread of this strategy, what you will be getting is somewhere around 250 to 60 rupees. So you can sell this strategy at the current levels, that is a credit spread. keep a stop loss of 300 on the upside, that is 50 points, and I'm expecting this to achieve the first target of 150 and then on the downside 100. So I think a good range bound consolidation move, what you can get in the Bank Nifty index throughout the day within this range.
Right, Kunal, would you consider riding this entire straddle through and through until the end of the expiry, or would you actually ask people to take profits off the table? What conditions would you consider in terms of continuing to ride it out?
So as I mentioned, firstly, when we are selling it, I have already mentioned a stop loss of 300 on the upside over here. I have given a target of 150 to 100 on the downside. So if you hold towards till the end of the expiry, this will automatically become zero if Bank Nifty expires at 45,600. So my suggestion is if your targets of 150 and 100 are achieved, then you can exit your position.
Okay, fair enough, and that's perhaps one way to also reduce your risks as well by actually taking some profits off the table, because we know how volatile expiries have been in the past and they can be. But we move on to stocks as well, and in terms of stocks, well, we've largely had a lot of traction in some of these banking stocks. Of course, we've had a lot of traction in HDFC Bank, but along with that, some of these other larger cap names like Axis Bank as well as ICICI Bank, so well, they opened lower. Well, they have actually started seeing a little bit of covering, and they're currently, at least Axis Bank is trading in the green, and well, we have seen a little bit of flattish movement as far as ICICI Bank is concerned. But Kunal, if I were to talk about some stocks from your end, you have calls on M&M and Tata Motors. Can you please take us through those?
Yes, I think firstly, if I talk about the stock recommendation, M&M Finance on the technical chart perspective have given a fresh breakout. The stock was consolidating since the last 2 weeks. So the resistance for the stock was at 305, and in today's trading session, we have seen a breakout in the stock with volumes. And I think the stock is now ready for further up move. So from the current levels, it is trading at 310. So my ideal buy range for the stock would be 310 to 305. So this is a range in which one could buy the stock here. Keep a stop loss of 290 on the downside. The first target what I'm expecting is 330, and second target is 340 on the upside over here. So M&M Finance on the technical chart looks very attractive at the current level. The momentum indicator RSI has also surpassed the level of 60, which clearly indicates that the momentum is likely to go up in the coming days as well. So M&M Finance is my first pick on the long side. Second is Tata Motors. Now Tata Motors on the chart looks very strong. The stock was consolidating in a broad range. Specifically, even on Monday's trading session, we had seen buying action. Again, on today's trading session, we are seeing buying from the lower levels. Now, if I look at the long-term chart or a weekly chart for Tata Motors, the Tata Motors has given a breakout from the previous week's high as well. So clearly indicating the momentum is rising. On the weekly chart, we have also got a positive crossover on Tata Motors as well. So I think a good buying opportunity, what you are getting as a momentum pick, 644, 645 is currently where the stock is trading. One can keep a stop loss of 625 on the downside. I'm looking out for targets of at least first, that is on the higher end 670, and second target is 690 on the upside.
Okay, well, there you have it. Those are some of those moves and calls coming in as far as stock-specific derivatives markets are concerned. Well, of course, in today's day of trade, we will continue to keep an eye on the Bank Nifty expiry, specifically how some of these banks have moved, and there has been increased volatility in not only HDFC Bank specifically, but also HDFC Bank causing that volatility in some of your banking indices as well. But on that note, we conclude this conversation. Kunal Shah, thank you so much for joining us and taking us through your views on the markets, as well as giving us some of those calls as well. And with that, we wrap this F&O session, but there's lots more lined up. Stay tuned to BQ Prime.